IMF and India. Brief history. The International Monetary Fund, IMF, and India have had a long and complex relationship since India's independence in 1947. The IMF was established in 1944 with the goal of promoting global economic stability and providing financial assistance to member countries experiencing balance of payments difficulties. India joined the IMF as a founding member in 1944, but it was not until the early 1950s that India began to receive financial assistance from the IMF. India faced severe balance of payments problems in the wake of World War II and the partition of the country, which resulted in the migration of millions of people across the new border with Pakistan. In 1952, India received its first loan from the IMF to help address these economic challenges. Throughout the 1950s and 1960s, India continued to receive financial assistance from the IMF as it struggled with a number of economic challenges, including high inflation, a growing budget deficit, and a balance of payments crisis. In 1966, India devalued its currency in an effort to address its balance of payments problems, and it subsequently received a large loan from the IMF to support its economic reforms. In the 1970s and 1980s, India's relationship with the IMF became more contentious as the country pursued a more independent economic policy and sought to reduce its reliance on foreign aid. India's leaders were critical of the IMF's policies, which they saw as promoting Western-style capitalism and unfairly favoring developed countries at the expense of developing countries. In 1991, India faced a severe balance of payments crisis and was forced to turn to the IMF for assistance once again. The IMF provided India with a loan of $2.2 billion, but it also imposed a number of conditions on the country, including liberalizing its economy and reducing government spending. In the years since, India's relationship with the IMF has become more positive as the country has implemented a number of economic reforms and become one of the world's fastest-growing major economies. India has also played an increasingly prominent role in the governance of the IMF, with its finance ministers and central bank governors participating in key decision-making forums. Today, the IMF continues to work with India and other member countries to promote global economic stability and address a range of economic challenges, including poverty reduction, job creation, and climate change. While India and the IMF have had their share of disagreements over the years, their partnership has also led to important economic reforms and helped to support India's emergence as a major economic power.